Before we dive into today's podcast, I just wanted to say a big thank you to our new sponsors of the next few episodes, and that's SumSub. If you haven't heard of SumSub, they're a global AML, KYC, and KYB solutions business operating not only here in South Africa but across the continent. Great business, great group of people. Got to know them really well over the last few months, and a big thank you to the entire team for sponsoring Talking Success and the next few episodes. So if you are looking for any compliance solutions around AML, KYC, KYB, give the guys at SumSub a shout. You'll be in safe hands. So thank you very much and enjoy the show.
Hey everyone, welcome back to Talking Success. Hope everyone's well wherever you're tuning in from. I'm joined today by someone that's actually been on the podcast before. He was on the podcast about 2 years ago and he was wearing a different hat. So I've asked him to come back on because he's got a new venture, but I also really want to talk about his journey because he exited his business to a very well-known Fintech here in South Africa that then rolled into another sort of bank. So we talk about that journey, and then we're going to be discussing all things vehicles today, right? So this is kind of car tech on top of fintech. Idan, great to have you on board. Thanks so much for joining. You've been a bit busy the last couple of years. Well, welcome back. I'd love to get a quick synopsis, kind of where you were, because you obviously Funder was your business. Like you and your brother, if I'm not mistaken. And then was it your brother?
No, it was just a high school best mate.
Okay, good enough. Bros then. Okay, that's fine.
Yeah.
And they kind of transitioned into something quite different. So welcome. Thanks for joining us. Give us the lowdown.
Awesome. Well, thanks for having me. It's good to be back. Yeah, I think the last time I did this thing was probably with you guys, must have been like 3 years ago.
Yeah, I think it was. Yeah, I
Two
think it
and a
was.
half, 3 years ago. Yeah, crazy. Yeah, so a lot has happened. Maybe kind of just taking a step back to kind of like my previous life, venturing into the new life. So yeah, we started a business with one of my best mates from school. It was called Funder, Fundrr. We're basically trying to, at the beginning, we actually wanted to create Africa's first peer-to-peer lending platform, essentially connecting. At the core was wanting to have consumer loans, so creating like individual retail investors to guys that need access to capital, creating investment instruments into like essentially debt notes, consumer debt notes. So that's what we wanted to do. We just wanted to be the platform. Quickly realized that regulation and the whole technology aspect of it was a little bit too big. So we said, fine, we'll just start as balance sheet lenders. So we'll start as lending on our own book. So that's kind of like that solved a lot of the things. But the one thing that it didn't solve was capital, right? I mean, if you wanted to become a lender off your own balance sheet, one of the biggest caveats to that is you need a lot of capital. I mean, if you don't have money, you don't have stock, right? Yeah. So it kind of like led us to go trying to raise money. We always have this infamous story about like it's over 60 rejections because we literally try to speak to every single person on the face of the planet to try to raise cash, like anything. At the beginning we went from like this amazing, like I think our first pitch was like 60 million rand raised on a 200 million rand valuation, like ridiculous stuff. We were pre-revenue, two young guys with zero lending experience trying to, we saw a lot of cool things happening in Silicon Valley and we thought like, why not? It's easy.
Yeah, absolutely.
Yeah. So we made a beautiful business plan and a nice presentation. We went out to 60 different investors and we got 60 consecutive no's. So it kind of like forced us into a corner to be like, do we carry on, try raising capital where we don't actually think it will come through? Or do we actually just get to market? Let's just try to do something like ourselves, like kind of bootstrap this. We didn't even know the term bootstrap existed back then, but essentially what we did was bootstrapping it. We just reached a point where we said, listen, let's just go into like the 3 F's, friends, families, and fools. Let's try get as much money that we can scrape. And in the lending business, like it's so capital intensive that as much money as you raise, it's not enough. So so we managed to scrape together a few 100,000 rands. When I say scrape together, I have a lot of respect for money. So it's a lot of money, but in the lending business, it's not a lot of money. So we managed to get together a few 100,000 rands, and we pulled it together, and we just essentially started lending. I mean, our first product was, we didn't have money to invest in technology. We didn't have money to pay ourselves salary. We went like 18 months without drawing a salary. We had, we were considered we had a Wix website on the front end, which we were paying, I think back then was like around 98 Rand a month. And all of our credit scorecard and everything was on Excel. So we
I remember the story. Yeah.
literally just went to the market, and funny enough, it's funny how the market positions you into something without you even knowing it. And I'll tell you why. Because we launched, and now we don't have any like finance experience or lending experience. We said like, shit, we need, can I say shit? Is it fine if I say? Okay. So we're like, shit, we need a bit of guidance, So we went and started applying to all these like incubators, and we were very fortunate enough to be accepted into Alpha Code, which like changed the course of our careers. So Alpha Code, for those that don't know, I think they stopped the incubation program, but it was one of Africa's leading fintech incubators. It was funded by RMR, and had Dominique Colette at the helm of it, which is probably one of the most veteran fintech investors and advisors probably on the continent. So we're sitting down with Dominique, and we're telling her the story, and she kind of like saw something in us, I guess, that she was like, okay, fine, come onto the program, which is very elite at the time. And then all of a sudden, overnight, we were considered a fintech because we were in a fintech incubator. Because we told her that, of our grand aspirations, which our grand aspiration was still to be a peer-to-peer lender and have a lot of things driven by technology. So we got accepted into Alpha Code, took all of the cash that we had, lent it out, and kind of like rolling, every cent that we were generating was used to fund another business, and going really, really small, really, really slow, until around May 2019, when we raised our first like debt facility, which was a monumental milestone for us. It was around 5 million Rand, which to us was a big sum of money. We weren't a big business, so we never had so much deal flow. So then we were like, what the hell are we going to do with this 5 million Rand? How are we going to get it to work? And then so we started growing, and then something happened that also, again, like a massive pivotal point in our journey, is that at the time Telkom was going out to the market with a new division of Telkom called Telkom Financial Services, and one of Telkom Financial Services pillars was Lend. And we just went out and started reaching out to them and say, could we power up Telkom Lend, which was what the product was called. We said we've got the balance sheet, we've got the technology, we've got everything to power it up, and we actually applied for it, and we land up getting it. This was around Feb 2020. Obviously, a month later, COVID hit. Now at this time, we're sitting with a massive distribution partner, being Telkom, getting access to all their small businesses, all their data, etc. But not a lot of capital to deploy, and not a lot of operational support to maintain such a big partnership. Over and above that, we faced COVID, which COVID was detrimental to our business. Like 90% of our customers weren't able to legally trade, so 90% of our revenue was slashed. The 10% that were allowed to trade landed up doing so well. It was in the private healthcare space that they landed up settling us early. So essentially, very short into COVID, we found ourselves with 100% of our book not actually paying us back, and trying to instill as much comfort to our investors to say like, no, don't worry, like they will come back online, actually not knowing if they will come back online. I mean, I remember a point where, we kind of made an executive decision where I was going to go look for a job. And then Jared, my ex-partner, he was going to like stay and wind down the book. We weren't going to deploy any new capital, just basically try to minimize losses and try to soften the blow as much as possible. I'm not sure if you remember around like July, August, that's when like the wheels of the economy started turning around quite quickly. I mean, I think it was the drop to level 3, if I'm not mistaken, that kind of opened up the whole economy. And we actually started to see that our book was actually coming back quicker than we anticipated. And customers actually now more than ever needed more capital, which was quite an interesting shift in our mindset. And yeah, so first thing, now we're sitting with this massive distribution deal with Telkom, our book's starting to perform again, and existing customers, which have been like loyal customers to us now for like over 2 years, we know them inside out. Now they're requesting more capital to kickstart their business again. We're actually in a great position. So one of the first things that we did around August was that August is that we went out to the market to try raise capital. Now it was still COVID, so everyone again kind of like told us, look, like it's not the right time. Just ride it out, ride the storm out. It's not the right time. No one's raising cash now. No one's deploying capital now. Like just kind of like stay put, which we didn't have that option because we knew that if we didn't service our book, if we didn't service our existing customers coming back, they would just go to our competitors. They would say like, look, like kind of like fund me, settle these guys, get them off my back, and then let me move over. And we knew slowly we'd lose all our customers. So we had this kind of idea to approach some of our competitors. We like to call them competitors, but they were much bigger than us. I don't know if they saw us as such competitors, but we saw them as competitors, and basically approached two companies. One is Merchant Capital, and the other one is Retail Capital. So I reached out to Carl. Always had like a great relationship with Carl. He's just an amazing individual, and probably the most respected like lender in the market. So we always used to bounce things off him, even though we were competitors. We always like to get his piece of advice. So when the time was right, we reached out to Carl, and we told him about like that we need capital. And essentially the beginning, the initial deal that we proposed to him, we said like, just give us a bit of capital, give us a bit of debt. We'll give you like a free carry in our business in terms of equity, and we'll pay you a spread on the money that you lend us. And so it's a good deal for you. You're making money on the debt, and you're getting like equity in this business, and just like let us grow again. And he kind of was interested, started having like negotiations, and he made an offer to buy us. And we weren't keen to sell at the time because we felt like we were just kind of like starting out. So we reached like a nice medium whereby he acquired 60% of the business in September 2020, and the remaining 40% of the business would be on an earnout basis, which materialized in March 2023. Wow. So straight from September 2020, we went into the Retail Capital home, still running our own brand funder, but now all of a sudden have access to capital that we never even knew existed. Obviously, Carl and the Retail Capital group are masters at raising capital. So as the deal came through, Carl said, look, you don't have to worry about capital again, just grow. What we managed to achieve in those like 2.5 years was something that I didn't actually know was possible to achieve in a lending business, because essentially all our money requirements was taken care of. All we had to do was just distribution and write good deals, make sure that the money we were deploying wasn't going to bad businesses. We were writing good deals, but just fine distribution. So during that tenure, obviously carried on growing our direct to business brand, which is Funder. but really kind of looked at distribution differently. And some of the things that we did really kind of changed our business. Obviously, we had the telecom product, so we were powering up telecom lend. Then we kind of like went and copy pasted it. So we approached South African breweries. We said to them, like, you guys have, at the time it was 50,000 businesses that they would supply booze to on a monthly basis. We said, you guys are sitting with all the businesses, all the data. Why don't we actually start underwriting your SMEs based on anonymized like alcohol purchases, understanding the margin of each bottle of beer that they sold, like what is their payment terms, etc., and give them working capital. I mean, all these small businesses need working capital. They buy a lot of stock from you, sits on their shelves until they sell that bottle of beer. They don't actually have money. They actually need an illiquid position. And they were keen, and we launched, and it was great success for us. We replicated the same thing with Blue Label Telecommunications. They've got 30,000 informal businesses that they supply prepaid vouchers to. We said the same thing: send us your anonymized data, let us underwrite them, and provide pre-approved funding offers to these SMEs that otherwise would not be able to access capital. So really being smart around distribution allowed us to 20x the business in a short amount of time. And then March 2023, deal concluded. We got retained by the bank. So my partner, Jared, went more into the risk side. I headed up business development and partnerships. And
this was for retail cap, right? Because the next part of the story hadn't quite happened yet.
So the next part of the story happened in between. So are you talking about the Town Bank transaction?
Yeah.
So Town Bank happened December 2022.
Right.
And then the materialization of funder happened March 2023. So when we got absorbed, we were already getting absorbed into the bank type of thing. And we landed up spending another. It's funny that we're both doing separate things now, but we both landed up resigning at the same time. My ex-partner now. We landed up staying there for another year working, and it was a great time. I mean, just the amount that I've learned personally from the retail capital guys, it was unbelievable. All of a sudden I was like a young guy and we went from a team of, I think, if I remember correctly, we were a team of like 7. All of a sudden going into a big organization, understanding how an actual business needs to run. And now all of a sudden sitting on Retail Capital's Exco, I was the youngest person by miles there. Just like, taking notes, like every single thing that someone says, like I'll just write down and like mentally take notes. And then at the same time trying to portray enough confidence to show that you actually deserve a seat at the table, but your own confidence, your own mind tells you like, I don't deserve to be here type of thing. So it was a constant struggle between
I guess it's like that sort of imposter syndrome, right? You kind of sit there and look around the room and go, really? Yeah, I'm sure.
100%.
Yeah.
So that was the story, and we kind of that wrapped up Funder. We learned a lot. It was a great space. I think we did a lot of good in the market. A ton of gray hairs, unsecured lending
It's not
during
for the
COVID.
Right? Yeah.
During COVID, I always laugh with Jared, my partner, because he's still in lending. I always told him I've got PTSD. I've seen through my lending years for now, especially because a lot of the times we raised debt in the early stage of Funder, we had to sign personal surety for it. So if things would have gone south, I would have been in debt for a very, very long time. So every time a customer didn't pay, a deal fell through, like something like that, we were both like our hearts would skip a beat, but it was fun at the same time.
Well, it's an incredible journey, and you've gone from kind of bootstrap. I was going to try and avoid to be funny, but I'm going to try anyway. You've gone from kind of bootstrap to car seat, right?
Yeah.
So talk us through this, right? So just so everyone's aware, we had a chat a couple of weeks back, and we were talking about the new business, the new venture called Flexclub, and actually, you know what? I'm not going to spoil it. I'm gonna let you kind of unravel what you've built and kind of what it serves. And interestingly, we'll come on to it in a bit, but I'm kind of a big fan, and I had been sort of utilizing these types of services
Yeah.
for way over a decade, probably 15, maybe even 20 years. Unbeknown to me that there was actually kind of a business around this, or potentially a fintech behind this. So, talk us through Flex Club. How did the idea come about? What is it first, and then how did the idea come about?
Sure. So, I mean, in large, Flexclub is a car subscription platform. I think the biggest differential with us and other car subscription companies is two main things. We don't own our own fleet, so we don't own our cars. So we partnered up with Avis and budget groups. And the second most important thing that kind of shifts us in the fintech space is that we've pioneered a pay-as-you-go service for cars, so a prepaid proposition for mobility. I'll give you a bit of a back. Let me actually say how we got to this thing, and then I'll tell you how we came up with this whole proposition. So I guess yeah, looking at cars as a whole in South Africa, again, it drew a lot of similarities to the SME space. When I started Fund, I saw a massive gap in the market and a massive need. Started looking overseas. What are people doing overseas? There were the likes back then of like Cabbage, etc., which were revolutionizing the SME lending space. And I said, hey, shit, can we actually replicate it into the South African economy and help South African businesses. And the exact same thing is happening currently around mobility. And when I talk about mobility, I'm talking about long-term mobility. Now, just a bit of statistics. TransUnion came out with statistics that were staggering, right? They were saying that there's 2 million vehicle sales leads every month. So call it 24 million sales leads. And what is a sales lead? It's basically a customer that either plays with a finance calculator, that is browsing and interacting with some sort of affordability tool around their vehicle finance. Out of that 24 annual leads, only 2 million land up actually applying for vehicle finance. So that basically means that only 8% are believe they are worthy enough to buy a car,
Yeah.
right? So the delta from the demand to actually what's happening on the ground was massive. And out of those 8% that are applying, so out of the 2 million annual vehicle finance applications, only 480,000 vehicles actually get sold.
Wow.
So if you kind of break it down and you say, okay, so many people want to access a car, but actually so many people are accessing a car, what could be done, right? Now, if you look at the South African auto landscape, there hasn't been any innovation done probably since the balloon payment was invented by the finance houses.
Yeah.
So there wasn't a ton. I mean, there's this whole wave of rent to own, and definitely not going to talk badly about anything, but I didn't believe that is the right solution. Merely once you start unpacking the whole rent to own story is that A, it's an extremely old vehicle that they give you, um, and B, it doesn't actually solve anything but owning a car. Now we looked again, kind of like looking overseas, what's happening overseas, and overseas you see there's a rise. I mean, we spoke about this last time, especially in your hometown and your home continent, car subscriptions are, are a massive thing. Now,
Yeah.
people don't own cars anymore, especially the younger generation. And once we break it down, like, why actually own a car, right? It's a depreciating asset. The total cost of ownership is always hidden because no one actually knows how much it costs to service a car, maintain a car. you drive, you hit potholes in this country. There's a plethora of reasons why the cost of ownership of the asset, which is the vehicle, actually far exceeds what you anticipate in your head and what you can write down. That it forces people to to find themselves in a bad financial position. Now, currently in South Africa, 70% of all vehicles that are driving on the road aren't insured. They're not insured.
Is it that
And
high? 50%.
that high, 70. And
Wow.
that actually means why, because when a customer buys the car, he kind of puts it into his or her head. They're like, okay, the car's going to cost me this, financing going to cost me this, insurance going to cost me this. I'm actually fine on a monthly basis to own a car. What lands up happening? They buy a car, they land up owning a car, and they see that these like recurring kind of hidden costs land up creeping. That the first thing they get rid of is insurance. They say, actually, I don't actually need insurance. Let me just kind of like ride it out and hope for the best type of thing. So we saw this problem surfacing and essentially emerging, and every month and every month or so you just see more like negative stats coming out about the auto industry and how sales are declining. Why? Because interest rates were through the roof. The rand was depreciating a lot. I mean, now we're on a great trajectory, but what I'm telling you was happening when I first looked at this earlier this year. It was just all the things were really like going in the opposite direction of accessibility into cars. So again, looked overseas and we saw that the younger generation don't actually have aspiration to own the car. They're all subscribed to the asset. Once you said, okay, let's do car subscriptions, I think one of the main things that we needed to kind of understand is we're going to build our own fleet. We're going to raise debt, buy our own cars, service them, maintain them. Obviously, the margin's a lot higher. The risk is a lot higher, and the capital adequacy needs to be a lot higher. Or are we going to partner up with some of the companies that are masters of this, i.e., the car rental companies? So yeah, we approached Avis and Budget. Why? They're the biggest in the country. They got 18,000 cars on their fleet. We approached them with a proposition: can we come up with a longer term product for the South African consumer, utilizing your assets? So you guys are the masters of day-to-day rentals. When you go down to the beach, when you go to the Kruger, you need a car. Who do you call? Avis, Budget, Europe Car, Sixt, whatever it may be, Hertz. But no one actually looks at these rental companies as a long-term mobility option, right? Everyone associates them with short-term. Everyone associates them with travel. Like when I travel, the first thing is like, oh, am I going to Uber or going to rent a car? If I rent a car, those are the brands. And yeah, we approached them and we said we're going to come up with a long-term proposition. But we further to that, we also want to kind of like turn things on its head, and we want to come up with a prepaid pay-as-you-go system. So I'll give you a bit of background on how that came about. We drew a lot of inspiration from the mobile network operators. So what happened in 1996, Vodacom introduced prepaid pay-as-you-go. So previous to that, the only way you could call people was through a contract. Now, a contract in essence is a postpaid product. In order to get access to a postpaid product, there has to be some form of credit underwriting, meaning you need to upload bank statements, you need to upload 3 months back pay slips, you need to run RTC scores, credit checks, etc. The mobile network operator would say, okay, you've got a contract now, talk away. Once you talk, text, whatever you might do, after 30 days, they would bill your account. So it was talk and then pay, talk and then pay. And all of a sudden, Vodacom introduces, which was actually pioneer, pay-as-you-go for mobile was actually invented in South Africa by Vodacom. So they came up with this pay-as-you-go system, which revolutionized the world. And I mean, if you look, 30 years ago, 40 years ago, 50 years ago, 60 years ago, 70 years ago, 80 years ago, 90 years ago, if you look If you look everywhere now, mobile network operators use prepaid and pay as you go. That's become like the new norm in telecommunications. So we kind of drew the same inspiration because we looked at the whole rental economy, and it was a postpaid product, meaning that you either needed to upload. So the only way you can access the car before Flexclub came along was two ways. You either own a car or rent a car. Now, to own a car, you need to upload bank statements, credit checks, pay slips, etc. If you want to rent a car, there's two options. You either upload the documents, run credit checks, and get billed from a debit order perspective, or you need to have a credit card. Now, if you start digging the amount of South Africans that actually have a credit card, it's less than 10%. So are you actually providing accessibility to the product if you're only looking at customers with, above average credit scores and a credit card? Not really. We didn't believe that, and that's why we built this prepaid pay-as-you-go system for cars, which essentially now anyone, because you're paying up front, there's no credit checks, there's no document uploads. You can pay via a credit card or a check card, whatever type of card you have, and it really truly democratized access to vehicles in South Africa for the South African consumer. Now, we can also service foreigners, but I mean, obviously we're a South African business, so we're going after like the South African consumer, and we're really trying to challenge the vehicle ownership space. So, I mean, what we see on our platform is that we see average term of car subscription is around 14 months. So, guys are actually coming onto our platform for a long-term alternative to ownership, right? Actually wanting to use our product really long term. Now, started unpacking who's actually our customer that's using our platform, and we found like really interesting things. So first of all, 50% of the customers that are currently using the Flexclub brand, have either thin credit file or a bad credit file, and that kind of draws to either have a bad credit file or you're a young professional. If you think about it, if you're a young professional entering a job, you can work at Investec, but you don't have your credit file is not thick enough to get access to any form of credit, right? So we see a lot of young professionals coming onto our platform, a lot of individuals that have bad credit score, but they can still afford the product. And actually 20% of our base already have vehicle finance already. So basically using it as a secondary car, whether for the young ones or for their spouse, whatever it may be. So what happens now is that with Flexclub, you come onto our platform. You essentially, we always say it's like building a mobile plan. So you come, you tell us what car you want, how long you want it for, where do you want to pick it up, do you want a baby seat, do you want an additional driver? Basically build a plan around your mobility needs, and then we'll give you one monthly fee, and that monthly fee will include the car insurance, maintenance, tires, windscreen, servicing, license renewal, like everything baked into one. The only other additional cost is traffic fines, petrol, and additional mileage. And then we'll send you a payment link, and we say that this would cost you X. Once you pay that payment link, you get access to 30 days and 3,000 kilometers. As you drive, your bundle depletes. After 30 days, we say, do you want to extend it? We'll send you another payment link. Do you want to top up your account again? Just like prepaid airtime, but for cars. That way, it creates so much flexibility where the customer can upgrade, downgrade, pause at any given time. Also, because we partnered up with Avis, we get access to their network of 70 pickup locations nationwide, meaning, Darren, if you have a meeting now you're based in Joburg, but you have a meeting now in Cape Town, you would drive to OR Tambo with your car, you leave the keys there, you hop on a flight, Cape Town International Airport, you'd go to the Avis branch, you collect keys, and off you go. You don't have to re-sign anything, you don't have to pay. You essentially have a car where you are across the country, or like a virtual car. And yeah, so we basically we truly believe that we're democratizing access to mobility in South Africa, and we truly believe that South Africans will slowly but surely shift away from the notion of ownership around their cars more into a utility-based usership model. So we always draw parallel. My partner Tinashe always draws parallels to, you don't actually need to own the cell phone towers to talk on your phone. You don't actually need to own the power stations from Eskom to use electricity. You don't actually need to own your car to be able to drive it. Now, we always say that like Uber, Lyft, all those bolts, they've solved the inner city problem. So like
Yep.
customers like moving around from A to B in close proximity, but no one's actually solved the out of the city kind of, and I'm talking about even like suburbia. Um, no one solved it in South Africa yet. And we're hoping to do that.
So, listen, it's fascinating. As I said to you when we spoke, I've been renting vehicles for years and years and years. A, travel a lot. B, I didn't really want a depreciating asset. I didn't see the point of it, and it's just really convenient, right? Whether it be Avis or whether it be Hertz or Europe Car or whoever it may be. Uh, the ability just to be able to go, here's the keys, I don't need a car anymore, is great. And I think when we talk about sort of mobility, and being able to get from A to B, yeah, you're quite right. The Ubers and the Bolts, they absolutely service that. But I think when you're looking at longer term, so actually I need a vehicle now. For the next 6 months, maybe I don't know, I'm on a contract in Cape Town, or I'm just traveling to Cape Town really so often from Joburg that I just need a car because it's really expensive just to, do a day by day lease on a vehicle, whatever it may be. To have that flexibility, I think is fantastic. Couple of questions I've got though. So you can pay now using a debit card, right? A check card. Where is the risk though for you guys? Because if I use a credit card, there's obviously some ability to charge and what have you. When I'm using my debit card, I don't really have that facility. So is there a big risk for you? How do you mitigate that?
Sure. So, I mean, that's a good question, and that's a question that kind of pops up over and over again. So, the way that we were able to solve for that is essentially partnering up with one of the biggest rental companies. Now, if you look at their footprint, they got a footprint in all 9 provinces. They install trackers into the car. So if you don't pay within 48 hours, we'll be able to switch off the car remotely and send one of their recoveries team, and they can get to you within half an hour. So again, that was one of the things that when we decided to we own our own fleet or partner up with a rental company, those are the types of things that you just cannot do if you own your asset. If you own like a small fleet, you just simply cannot do it. You don't have the operational capacity, you don't have the network effect, you just don't have the scale to really innovate and do something different in an existing market of rentals. We would have just been another rental, right? We would have probably asked for bank statements, pay slips, would have run a credit score on you, would have run a debit order system, would have placed a tracker. So all of the things that normal rental companies do. But because we partner up with the big guys, we're able to tell them your underwriting doesn't actually have to be in a form of credit, right? Your underwriting can be in a form of operational capacity. Like, can you switch off and recover the car quick enough um, to maintain kind of like the default levels that you're kind of experiencing now on a post-pay product? Because we're talking about like credit cards and debit orders. They're not bulletproof, right? There's still some people that can give you a credit card, but there's no money. There's no money. You can do all the beautiful checks in the world. I mean, that I even saw from Funder days, like some really strong clients land up defaulting. So nothing's bulletproof, but we truly believe that moving from a postpaid to a prepaid will a provide the rental companies 30-day prior notice to a defaulting customer, because now you essentially have 30 days visibility, 30-day earlier visibility on a customer if he's not performing well.
Yeah.
And over and above that, I mean, cash flow wise, you can only imagine now receiving your money 30 days before at scale, it really does move the needle.
I'm sure it does. I saw something the other day. Funny enough, I was going to send it to you, and I think I've had your WhatsApp number, but I think it was called Remote Key. I think it's called that, and it's a series
Okay.
of manufacturers, right? So the BMWs and the Mercedes of this world, but also some sort of, I say, normal cars. They've introduced technology where I can send a key to my phone or to someone else's phone, and they can go and get access. Do you see that being kind of the future and what you guys will get into? I'm not saying it's going to be in the next year or two, but certainly as we kind of transcend and we get to kind of year 5, do you think there'll be that sort of almost self-service? So, you subscribe to Flexclub, you make your payment, and poof, a key pops up on your phone, and you go up to the car, it gives you directions, on, in, I drive away. I mean, literally, it's kind of seamless. Do you think that's the future, or is that kind of pie in the sky?
Yeah, look, I mean, that's a good question. I think because of I always refer back to the split road. Do we own our own cars or not?
Yeah,
Because we don't own our own cars, we don't have such an influence over the type of assets and the technology that will be utilized by the rental companies. But we essentially the payment infrastructure.
sure.
So we just the layer. We just facilitate the monthly top up transactions. So
Yeah,
if you ask me, you know, will it happen? I think it will happen, but I don't know, right? I do believe that is where we're going to go, and I do believe that working closely with the big car rental companies, I think there's going to be a ton of innovation coming up, quite soon.
yeah, I agree. I think there's innovation happening in all sectors, and sometimes there's sectors you look at and you go, "How can you innovate there?" Like car rental, but clearly you can. I think
Yeah,
for someone that's stood in many a queue in many an airport, car hire company, especially not so actually it's really good in South Africa, but certainly in the UK or the US, it's terrible, right? You can stand there for 2 hours trying to get a car. To be able to have that kind of instant availability where actually I've got an NFC or whatever it is in my phone. I go up, I tap the card, I drive off. I mean, that's brilliant if you can get to that. So, but I appreciate you. You're kind of you're facilitating. You're effectively the Uber of car rentals, right? You're kind of the platform, which is amazing. And before we go, kind of what's kind of the next year? Where are we now? October. This year's just flown by. What's the
yeah.
next 12 months looking like for you guys? What are your kind of plans and where are you? We have this conversation in 12 months' time. What's the conversation going to be?
Sure. So I think what's next on our roadmap is we're seeing the business split into two, funny enough. So we see one is being Flexclub, direct to consumer. We have a value proposition, really kind of pushing car subscriptions to through our own channel, controlling the narrative and the brand. But over and above that now, I mean, probably heard it first on here because we only launched at Wednesday at midnight. But we actually launched, so we white labeled our platform for Avis themselves. So Avis have gone into the market with a product called Avis Subscriptions, which is their
Wow.
own pay-as-you-go product,
Okay.
powered up by our technology, powered up by our rails. There will be some PR releasing maybe by the time this podcast gets out, we'll see some traction in the market with regards to that. Um, so you're asking me about 12 months. Look, in a startup, it's hard to understand where you're going to be in the next 12 months,
Yeah,
but
yeah,
all of a sudden we found ourselves as like a B2C and a B2B company. So I'm not sure where we're going to go from here, but yeah, we have these two channels which we're gonna test out. Our B2C offering and our brands performing like phenomenal in the market. The unit economics make sense. Our customers are being retained. If you just pop over and see some of the reviews that we're getting on our brand, on our Flex Club brand, it just shows you that we're doing things right, which is great. Now, will things carry on being right at scale? That's a whole nother conversation, and we need to gear up to make sure they do. But over and above that, now we need to we're eagerly anticipating how is our business, how can our platform power up other brands that want to go into the market? So not only has Avis launched earlier this week with Avis subscriptions, which is their own brand on top of our technology, we're also in really progressive talks with another two corporates, two well-known corporates. We'll be sharing that information probably beginning of next year, but two other corporates which we're doing the same thing. We're white labeling our technology to provide them with a pay-as-you-go prepaid mobility offering for their customers. So we essentially found ourselves as gatekeepers to this piece of technology with Avis's fleet that really, revolutionize the way people are going to be accessing cars, because you come onto our platform, you fill out the application, within like 30 seconds or so, you can apply for a car and you can collect it the following day. So the process has gone extremely smooth. We believe the onboarding we solved for, Darren, you're 100% right. Like the fulfillment piece is something that we need to work on. It irritates people to stand in queues, drive to the collection point. So it's definitely something we'll work on. But yeah, to answer your question, I see ourselves, if you had to ask me in 12 months' time, carry on growing Flexclub as a brand to the market, but over and above that, powering up a few big corporates with their own prepaid mobility offering.
Amazing. Last question. Have you migrated from Excel onto something a little bit more robust, or are you running
Yeah.
Flexclub on Excel?
No. That wouldn't be possible. Hey? That wouldn't be possible. No. We built everything in house. We have an extremely talented CTO, Howie. I actually poached him myself as we started this business. I said, you actually don't have a choice. Come over. But yeah, he's actually built everything in house. We're growing our engineering team, and yeah, so it's really exciting.
Listen, it's fantastic to hear, and thank you for coming back on. There's not been actually. I've got Carl coming on in the next couple of weeks,
Oh
so that's
wow,
an interesting conversation as well. Because I know you're a big fan. I've been a big fan of his for many years as well. I think I've
sure.
only had the pleasure of meeting him once or twice, so looking forward to having him on. But I really appreciate you coming on. Congratulations with the Avis deal.
Thank
Congratulations
you.
on the exit. A year and a bit ago, and I'm looking forward to seeing what Flex Club does, kind of in the not too distant future.
Yeah, appreciate it. Thanks for having me on.
That's a pleasure. Everyone who's listening, I'm going to put some links down below to Flex Club, to various different sort of articles, and to some of the reviews as well. So have a look at those. And yeah, if you want to get in touch, there's the website. You can find him on LinkedIn. And have a great day. We'll see you next week. Thank you very much.